All right, so let's take a look at how the Biden economy is impacting both Wall Street and Main Street.
Yeah, here to discuss, host of the Watchdog on Wall Street radio show, Chris Markowski. Chris, we've got the Dow. It's been up and down around 1,000 points. It's down 1,057 now. What's going on? We've seen a weakness, and we saw it bounce yesterday, 932, after they only raised interest rates a half a percentage point rather than 3/4 of a percentage point. So what's going on?
Well, yesterday, I think it had a lot to do with Jay Powell coming out and saying that he's taken 75 basis points off the table moving forward. I think there's some concern over the next couple of days because you're going to have various different Fed governors giving speeches here and there and what might come out of their mouths and driving the market in either direction. As far as individual investors are concerned, I want to make this very clear. There was like a song from the early 60s. Mama said there'll be days like this. Been doing this for almost 3 decades now, and there's going to be days like this. Don't be one of the greater fools out there and freaks out if you have a high-quality portfolio and start selling into any of this. Evaluate all of the companies. You should have a competent financial advisor. You've got high-quality companies in your portfolio, dollar cost average, and don't buy into the nonsense and run for the hills.
I'm going to reference another song there, Chris. Ooh, child, things can only get better. How long is that going to take? I mean, really, what can we look ahead to? Maybe some good news on the horizon.
Well, with inflation, it's going to take some time. I mean, you want to look on the silver lining of things. It could have been worse. They could have passed Build Back Better, and they would have had to print even more money to get all of that through. I mean, that would have been a nightmare. We had that $1.9 trillion COVID package right after Trump passed a $900 billion COVID package. You can't print that much money and expect it not to be inflationary. It was funny. You put up great discussion with Professor Marici. You had the bit up there, Yellen, saying that the economy's strong. She was telling us last year, I was on your program, that inflation was transitory. They were all saying the same thing. I don't think that they have any credibility. I would add one thing to Professor Marici's statement. He's talking about inflation and what you're paying at the gas pump. It's also your grocery bill, too. That's where it's really hitting people as well. I mean, you go to the grocery store and you're seeing the prices you're paying, and people feel, yeah, they might be making more money, but it's 2 steps forward, 3 steps back. And that's not the way you want to go. I hope that the Fed's basically winding down of their bond portfolio is going to suck up a lot of this excess money supply. And I think that's going to actually do more than raising rates.
Yeah, and they should have started that a long time ago at a faster rate. And they should have raised rates sooner. Your advice to people watching, though, if they have 401ks or if they have retirement money, be careful about selling. There was a saying when I was a stockbroker, you got to be right twice when you sell and then when you buy back in, and almost nobody can do that.
Yeah, I remember when I first started in the business, and you had to work under some broker and telling us that we're experts at pricing and timing. That's nonsense. Nobody is an expert in pricing and timing. You're not buying the stock market, you're buying companies, and you have to have a time frame. And you're not going to get in at the exact bottom, and you're not going to get out at the exact top. It's what you get on the in-between what really matters. So you have to focus on that and focus on the long term, and you'll be fine. Don't worry about a lot of this stuff. And also be aware of all these people giving comparisons to the 70s or the dot-com sell-off. Every situation is different. As bad as it is right now, as we're dealing with this, we still have a very, very tight labor market. And if you want to get a job, you can go out and get one. That makes it a hell of a lot different than the late 1970s.
That's for sure.
Indeed.
Yeah. All right, Chris Markowski, thank you very much, sir.
Thanks, Chris.